A very good afternoon to you. Let's take a look at the markets. Asian markets rebounded in today's session. This as some players were hopeful about the prospect of trade talks and individual countries being able to negotiate more favorable positions with the United States. Treasury Secretary Scott Bessent said Japan was likely to be prioritized in trade talks with the Trump administration and that he would lead negotiations with Japanese Prime Minister Shigeru Ishiba. The Nikkei share average jumped 6%. The Hang Seng Index rose by 1.51%, while the Shanghai Composite Index closed up 1.6%. All right, we see that U.S. markets were trading, but we don't have the details on that. Let's just go up to the next thing. All right, let's see what's happening on the local market. The all-share index is up 1% at 83,006 index points. The rand is trading at 19.49 against the US dollar, 21.29 vis-a-vis the euro, and 24.83 against the British pound. Gold is trading at $3,006 an ounce, platinum at $924 an ounce, and Brent crude oil is trading slightly up at $64.61 a barrel. All right, let's get into conversation with Devin Schutte. He's the head of investments at the Robert Group. Let's start the conversation. Thanks very much for joining us, Devin. So why did we see the local stock market close in positive territory yesterday when all the other bourses were in the red?
Hey, Nombo, good to be here. Short answer is I'm not sure, but I think really what it has to do with is everyone trying to second guess what's going to happen with these tariffs. And, you know, you were just mentioning now the potential deal with Japan and how that's improved their market. Yesterday, we had a rumor that Trump was going to give a 90-day reprieve to the tariffs, and that also saw markets rally and then sell off again. So I think the point is just that we're in a period of heightened uncertainty. The news flow is still very volatile, and there's very little data to back it up. So while it remains this fluid, you're seeing traders trying to get ahead of each other. I think, you know, the weaker rand yesterday would have helped our market to some degree, and we had the platinum group metals, which are exempt from the tariffs, moving higher. So that would have ascribed part of it, but really it's just a tough old place for investors to be at the moment, unfortunately.
Yeah. So today, even after Donald Trump confirmed that the reciprocal tariffs are going ahead, after a rumor that perhaps that wasn't the case, there was going to be a 90-day reprieve, Asian markets picked up quite nicely, and even US futures are said to suggest a positive opening in US markets later. What's changed?
Not a whole lot. I think what you saw is just an absolutely brutal sell-off Thursday, Friday last week. It was quick. There was just no place to hide. Correlations went to 1, and, you know, even gold came down, which has really, you know, typically been a safe haven there. So I think maybe what you're seeing is just a little bit of things being overdone and recovering. And again, you know, if the news flow changes out of the Trump administration, this market is poised to rally and could go back to new highs. I'm talking about the US markets particularly, but many other markets as well. So you've just got this really sharp volatility that's very, very difficult to handle. And quite frankly, no, nothing's changed yet. We've got up to 70 countries we're here at the moment queuing up to do trade deals with the US, but definitely nothing concrete yet. And as a result, unfortunately, I think volatility here to stay in the short term.
Yeah. So I see that the European Union has said that it will impose a 25% import tariff on US goods. That's a retaliation that Trump has warned trading partners against. I mean, Donald Trump has already had a go at China to say, how dare you levy 34% import tariffs on us? If you do that, we're going to levy 50% on you. And China's come back and said, bring it on. If you do that, we'll also retaliate. So it's just a mess. So the European Union has decided to take this action. What's your reading of how European markets are faring at the moment as well?
Yeah, look, I mean, I think there's some relief in European markets today, and we're seeing somewhat of a recovery, which is great. Also, remember, European markets on the equity side came into the sell-off at much lower valuations, so you could argue had less to fall. US valuations were a lot higher. But I think if you're looking at the yes, they've said they're willing to retaliate and protect their interests, but they've also said that, they're willing to negotiate on a deal that works for both parties. So I think we're in this real kind of cut and thrust of negotiations at the moment, which we know is Donald Trump's terrain. I mean, this is no surprise to markets that we were going to get tariffs from the Trump administration. I think the extent and the breadth of them have taken the markets by storm. But here we are now having to deal with them. You mentioned China as well, Nompo. I think that's a very, very interesting one. I think China was expecting this. They've had a pre-planned playbook to Trump, so I don't think they're taken by surprise here, and I don't see any panic in the Chinese market. And if you look at the data, quite frankly, the American consumers got way more to lose than China. China only exports around 3% of their GDP to the US, whereas US companies are far more reliant on China for their markets and for their exports. To my mind, China actually holds more of the trump cards, you'll excuse the pun, than the US does. So yeah, it's just a really messy, busy time at the moment, and investors and traders trying to wade their way through it as the news flow becomes more clear.
So coming to our local currency, the rand, it's retraced a small part of its losses, but it remains worryingly weak from an inflation importation point of view. What are your expectations for the local currency with all the uncertainty that we're experiencing, both global and local?
Yeah, so the rand still remaining quite circumspect. I think the global macro environment we've just been chatting about is feeding into that weakness. But I think we've also got some domestic factors, particularly with the political risk from the budget fallout, call it that, is still playing into it. So, I think that is still weighing into it. And my sense is until we get clarity on that, our local budget specifically, and see how this plays out with tariffs, the rand will remain vulnerable. But it's not all bad news. We've got oil plumbing new lows. That's going to be great for inflation. So that might offset some of the the imported inflation risk from a weaker currency. And then of course what the big question that we all need to be asking is what's going to happen with interest rates. This is something we've spoken about for many, many months. That's kind of gone on the back burner, but to my mind, all eyes should be on Jerome Powell and how he's going to react, particularly in the US, and how that filters down to other countries like ourselves. So yeah, lots to watch at the moment. There's no doubt about it.
Indeed. Well, thank you very much for your time and insights. As always, that was Devin Schutte. He's the head of investments at the Royal Bear Group. And apologies about the US data, but in actual fact, the Dow and the S&P 500, they did register decreases at yesterday's close, but the Nasdaq was up 0.1%. But we do see that the US futures are looking good. It looks as though markets there are going to open in positive territory at around 3:30 South African time.